Louis-Pierre Gignac, President and CEO of GMIN Ventures. We're looking to build essentially the third largest gold mine in Brazil with this new project that we're proposing for Tocantinzinho.
How are you, Louis-Pierre? We saw you back in March. We had a little chat about the Tapajós region, and it's the new gold mine for Brazil. And you've just put out the feasibility study. Some nice numbers in there. You happy?
Yeah, some really good numbers. I mean, we're looking at a 24% rate of return on this project. Obviously, we've gone through a significant update for this feasibility study, and we're showing some very robust numbers. So we're very happy about putting the study out today.
So it's an update study from the 2019. You've reduced the ounces produced from I think it was 184,000 down to 174.7. Obviously in a better higher gold environment, but your AISC's down. And so more broadly, it's an upgrade on the last feasibility study, but you've kind of tweaked things around. I'm just wondering why you did that, because you talk about increasing the initial CAPEX, etc. So what are the variables you played around with, and why?
Yeah. So I mean, the previous study was based on $1,300 reserve price for gold, or $1,200, and obviously with the current market, we're using $1,400 gold for updating our reserves. So that's allows us to have a larger pit that's economic. So we're essentially adding 200,000 ounces to the reserves. So we'll have 2 million ounces of reserves versus the previous study. So with that, we've included actually some mining dilution in that reserve. We come out with a grade of 1.31, which is a bit lower than what it was before, but that's because we've added a bit of conservatism, some dilution in the reserve estimate. But overall, we achieve a very interesting gold production profile. Over the life of mine of 10 and a half years, we'll average about 175,000 ounces of production. And for the first 5 years, we'll be at about 196,000 ounces of production. So yeah, this is a bit of a bump up than what was previously published on this project.
Right, and so if you're going about doing this, you got to fund it. It's like whatever it's from memory, it's around 415 million market CAPEX. You are whatever 200 million market cap company. There's a kind of obviously with feasibility, so a huge degree of certainty around this. So what are the funding options available to you? Because I saw the raise you did last year, 70 million. You got a lot of institutional money in quite quickly. You guys followed your own money. Took about 7-8% of that yourselves. Is there a degree of confidence about getting this funded in this market? Because I'm just looking at equities across the board are struggling a little bit. What do you think your position is going to be?
So I mean, the way we look at it, you look at our CAPEX. It's 458 million CAPEX, and that includes our mining equipment. And so a lot of projects don't actually include that. They kind of assume they're going to lease it, and so they're only putting the initial down payments in there. We're actually reflecting the full value of the mining equipment going into the project. So when we talk about financing, obviously we do expect to get some equipment financing from vendors for our mining equipment, and we've already had those discussions. So when it comes to looking at financing the project, there's obviously equipment vendor financing for 40 to 50 million. We are sitting on 58 million of cash right now, which obviously will be going in towards the project in various forms. So whether it's long lead items and equipment purchases that we'll be making over the next 6 months. But essentially our cash position is part of our funding going into the project. And then, obviously we do have various interested parties with respect to private debt or bank debt and the streamers that are very keen to be making proposals to us. And, this is the timing for us with this study coming out. We're essentially launching that process now with the feasibility study document and all the backup behind it. That allows us to really move forward in that process right now.
Right, and explain to me the bit. It's kind of like you're keeping it in the family, right? You've got obviously GMIN services, which is obviously where you have spun out of. who've invested in this, but you are going to be utilizing some of those. So why? What are the advantages to doing that, and why should we not read that as nepotism? Why is that a good thing for this company?
Yeah, I mean, really, for us, I mean, it's a good thing in the sense that if you look at many development stage companies, I mean, one of their big challenges is getting access to the right teams to be able to execute on their projects. So really, we feel that's one of the risks that we've kind of taken out of the equation here, in the sense that we have an engineering company that we're privately owned by our family. And we do have a master services agreement between the two companies. And obviously we will be pulling people from the services business as our in-house construction and engineering team going forward now. So that for us, that takes a lot of the risk out of saying, well, who are we going to outsource our construction management to, or where are we going to find people to build this project? We do have the senior team that is already identified that's going to be part of our project going forward. So we see that as a very, very attractive advantage for our company and the project.
Yeah, obviously, I think their reputation precedes them. But what else did they bring forward apart from being there? Because you can say, we'll bring in the best of those guys, and we'll utilize their services, and they know what they're talking about. What have they given you in terms of the understanding of the challenges ahead here? Because Tapajos region, it's a new kind of gold district. We did a panel with you. I think we had Cabral on there, and Sarabi, I think, who've been talking about the region, but not a lot of traction. You're coming in here as a significant potential producer in the near term, getting eyes on it. But what were the challenges? Why were you able to walk in and pick this up and say, I think we can make this good, compared to, perhaps the people who had it before you?
Yeah, I think, it's the fact of maybe some of the prior experiences that our company has. I mean, we built the Marion mine for Newmont in Suriname. That's a very similar project, so similar environment. We're talking about the tropical environment with 2 meters of rain a year, language barriers in the sense that, there's they speak a Creole of Dutch. So yes, there is language barriers that we're facing in Brazil, new administrative systems to deal with. But the reality is our teams have executed on projects in similar environments. And I'd say Ecuador was essentially the same. Very difficult conditions, and in a jurisdiction where there wasn't a lot of mining expertise to start with. So Ecuador is very young when it comes to mining versus Brazil, where we do have the ability to find lots of skilled people in technical fields and construction expertise as well. So, and not on top of that, it's also the fact that in Brazil we do expect to have lots of vendors and manufacturers that we can be buying from, as opposed to having to import from internationally from other countries. So that is a major advantage for this project, and for us it's actually something that will be easier than our previous projects that we've looked at and dealt with in the past. So
so what's the secret sauce to this one? Because I'm looking at the AISC on this. Albeit a 10.5-year life of mine, I suspect you'll be doing exploration to expand that. This is a relatively simple process, but
yeah.
It is in the middle of nowhere, isn't it? What's the infrastructure around you? What is there anything being built, or is it reliant on you building it in terms of roads and power, etc.?
Yeah, so right now the access road into the property, into the project is there. We will be doing some upgrades to that road, but essentially we can drive into the project right now. So the site is accessible. Previously it wasn't. Before the road being built, it was a fly-in, fly-out type of operation, so very difficult to access. But in today's environment, and with the road having been constructed, we can drive in. So we do have a small exploration camp right now that will be expanding to support construction. But essentially we will be building a permanent camp, 1,200 person camp, where we can have people, everyone will be on a rotation basis into the site. So in terms of remoteness, that's almost an advantage in several respects as well. We don't have anyone around the project. We don't have any issues with respect to impacting communities or or whatnot. So what that also does is it allows us to draw from labor pools that are much further away from the project because we do have a camp. So you'll see, I mean, that does get built into our G&A costs. I mean, we do have people on camp, so we're feeding and lodging people. But that's a minor cost to pay as opposed to not having the right people on site. So, we will be building a power line to connect to the grid, 198 kilometer power line. So yes, in that respect, that's part of the reason why we'll have reasonable costs, getting access to the national grid. Talking about our process, it is a simple process. We have a coarse grind where we float the sulfides, so not a lot of energy going into that. And we do have reasonable good grade for, look at all open pits in Brazil. I mean, 130 grams per ton with the strip ratio that we have of 3.4, that makes this a really attractive project, which gives us this low all-in sustaining cost that we're projecting.
It does. But what I'm trying to think of the other barriers, because like when we've had companies on from Brazil previously, they've suffered from inflation. Everyone's now constantly talking about inflation. More than that, the kind of supply chain issues, getting things like filters. Something as simple as a filter, holding, projects out for a couple of weeks at a time. The GMIN services bit, I guess, does that reduce the risk of being able to access equipment?
I think it's a question of identifying the long lead item equipment and making sure you're getting those orders in. So, for example, on the mining equipment, we've already committed to 12 trucks and a large shovel, and we're about to commit to some of the large mechanical process equipment. So, going back to supply chain issues, that's part of what we're trying to stay ahead of with the cash balance that we have. But in the end, it's a question of getting your procurement process down pat. And like I said, we're trying to purchase locally where we can from vendors that have what we require in country. So we're trying to take out the international logistics issues out of the equation, and simply deal with the in-country logistics, which are much simpler to manage and whatnot. But going back to the inflation topic, I mean, our CAPEX is higher than what it was before by 7%. But if you actually normalize it for exchange rate, I mean, we're using a 5.2 to 1 exchange rate, which is more of a current rate and kind of in line with the 2-year trailing average for the Brazilian real. So, if you normalize the previous study to that exchange rate, our CAPEX is actually 27% higher. So, that's kind of what we've been saying is that, the exchange rate is there to help offset some of the inflationary aspects that we're seeing in the market. So even though our CAPEX is higher, it's a reasonable increase that makes the project very attractive. So, that's part of the reason as well for purchasing locally. We find that prices on the local scene are sometimes more attractive.
Okay. So, I think we've heard that before from Brazilian companies. Now, given this is potentially third largest gold mine in Brazil, it's big, but I've got to ask the question about, because you as CEO are going to face this all the time. Where's the growth? Where's the growth? Where's the growth? You got to keep driving this thing. So this is a feasibility study. How quickly do you move through to FID? And then once you get past, start of construction, do you look to M&A activity?
Yeah, look, I think on our property itself, I mean, we have a lot of ground to play with to start with that hasn't been explored in the past. So I think organically there's a lot that we can do with our property. Right now we're actually doing a drilling campaign right now. And we're trying to get that done before we get into the heat of construction, because then we're going to need beds for construction people as opposed to geologists and drillers. But right now we're focusing on drilling beneath the pit. When you look at our resource to reserve, I mean, we're converting 97% of our resource to reserve. It's only because we haven't drilled at depth below the pit. So we see that as low-hanging fruit, where we're trying to poke some holes in there and build up some resource beneath the pit. And, going back to our low strip ratio, we'll be able to pull that in with the economics we have on the project. But, beyond that, we do see a really interesting regional trend on our property. It goes north, northwest. And we've had a few drill holes in there where there's actually a copper anomaly that's very interesting. This could turn into a copper gold anomaly if we get it in the right, get the right part of it drilled off and identified. But definitely, there's the opportunity to find other intrusions similar to TZ on this land package. So that's something we'll be focusing on as we move along. But we'll definitely add a lot of potential and prospectivity to what we already know right now.
Okay, so feasibility study numbers out today. Let's see how the market reacts. They look pretty solid. I can't see why there wouldn't be positive reaction to that, but you never know. The market's a funny and fickle thing at the moment. But the blue sky component is you've got a big enough land package with exploration potential. How do you go about realizing that? So have you got issued guidance on that in terms of spend? Have you got targets? Is it a fairly early stage process? Are you going to be doing drill or a little bit earlier than that and using other means of identifying targets? Where are you?
So, I mean, we have some soil geochem on the property, and it isn't, the coverage isn't complete yet. There's definitely areas that need additional soil geochem on it to identify some additional drill targets. So that's essentially the first step that we'd be putting in place as part of our regional program. But when it comes to the Santa Patricia target, where we do have some copper mineralization, we actually have some inbounds from other companies wanting to do JVs on that prospect. So we know it's interesting, and like we said, I mean, once we start building this mine and getting some infrastructure into the region, it opens up a lot of possibilities for other deposits and other companies in the region. So that's why we're getting these inbounds on some of the copper mineralization. But in our view, we're hoping that we find the copper gold part of this, and so that'll be part of what we'll look to follow up in the near term as well.
Okay. So have you allocated a budget for any of this?
Yeah, right now we're in the process of a 10,000 meter drill campaign right now, and most of that's focused around the main deposit. The next piece will be essentially the soil geochem that we'll be doing in the second part of this year to identify drill targets in the continuity of this regional trend that we're in. Okay,
well, I guess more of that as and when you can announce that. Back on the fund investment decision, what's the time? What's the time to that again? Sorry, when do you hope to be able to get there?
The timing on what?
The FID, but in terms of the build out.
Yeah. Okay. I mean, in terms of timeline for that, I mean, what we're looking to initially start is some early works in the second quarter of this year, and get into the full construction by the second half of this year. And we essentially have 2 years of construction bringing us to commercial production in the third quarter of 2024. So that's essentially
so which year of 2024?
Commercial production.
Yeah, sorry, I just lost you there. Okay, in 2024. I mean, the other thing I noticed that you've done is around the the NSR, where you've taken a 1% back of the 3.5% NSR on this for $2 million, and that you've got a second tranche of $3.5 million you can pay for an additional 1%.
Correct.
So that's quite significant, and obviously worth it. And you've got the cash to do that. Do you think you'll do the second one?
Oh yeah, for sure.
Definitely.
That's a given. I mean, it's just contractually we have essentially 30 days after we commit to a construction decision to execute that second buyback. So it's buying back an additional 1%, which would leave the project with 1.5% private royalty to two royalty holders, and then the government has a 1.5% royalty as well. So that second buyback we obviously intend to do when we announce the official construction decision towards June, July this year.
Okay, and with regards to the kind of corporate structure, like today's just like a process of discovery, because obviously we've not talked to the company much, and hopefully they'll come back on and get a little bit technical with us, further down the line. But with the corporate structure, you've got the attention of the institutional guys, and for a company of 200 million market cap, that's what most companies would be very envious of. What do you think the profile needs to look like going forward? Is it just right? We only have eyes for institutional, and there's not going to be much opportunity for retail to kind of get in here, or are you kind of cognizant of the need for retail to kind of help with the liquidity and trading of the stock?
Yeah, no, definitely. We think that the next equity raise that we'll be doing. I mean, we'd like to be a higher retail component to it. So definitely, like you said, I mean, 57% of our shareholding is institutional right now, and there's and then strategic being Eldorado and management. So there's only 12% retail in our stock right now. So I'd say with our next equity raise, that'll be our equity plug as part of our project financing. We'll be looking to pull in the retail side for sure.
Okay. Good news indeed. Well, appreciate the quick update here on where you're at. Feasibility study looks good. Like I say, let's hope the market thinks so too. Again, we'd love to see you come back on, get a little bit technical, maybe even talk about the trials and tribulations of doing business in South America, ESG, and greenification generally in the marketplace. So appreciate your time today. Thank you, Louis-Pierre.
Thank you very much for having me.